Well, we have a little bit of a low surprise on the monthly numbers and a little bit of an exact number on the year over year. CPI monthly up 0.3%. Remember, there were no October numbers, so the November numbers didn't get into this as a month over month thing. But the 0.3 translates into 2.7% year over year. Core comes in at 0.2 gain. That translates to a 2.6% year over year number. There were some expectations we would see a bigger rise in some of these numbers because of the government shutdown and the way things were put together for October and November, but it looks like we didn't have any kind of major snapback.
Mike, as you look at that downside surprise, which is certainly what this market is trading on, what's behind it?
Well, it looks at this point like a lot of it has to do with gasoline prices down a 0.5% on the month. Most other categories seem to be up, although we did see a drop of 1.1% for used cars. That was somewhat predicted. The interesting thing is housing, as you were talking about, because there was a feeling that the lack of October data would depress the housing numbers and keep them depressed. But we see the owner's equivalent rent come in by 0.3 gain. That's up a little bit, and rent itself up 0.4 on the month. Lodging away from home is one of the biggest movers. Hotels up 3.5%. That looks like it's incorporating some distortion from the government shutdown. And apparel up 0.6%. That's not a surprise. There was an anticipation that the November numbers have been depressed by discounting for Black Friday, so we would see a rebound. And that's one area in which we do see a rebound. Goods prices were flat on the month. Services prices up 0.3. So all in all, a fairly contained report. But we do have to caution that because of the shutdown, there are going to be distortions in this data, and we'll have to figure out which of these numbers are the most distorted.